The pandemic hit us all hard, but especially hard hit were small businesses and the gig economy. Remember when you got sick or your family got sick and you couldn't work? Imagine if the government had set aside relief funds up to $32,200 for us as compensation for the financial burdens we felt during that time. Well, guess what? They did. But most people are not aware of this pandemic credit program. Seize this opportunity while it's within your reach. Enter this ETC, the Self-Employed Tax Credit, designed specifically for those with 1099 income whose business profitability was impacted by the pandemic. This isn't just any fund. It's money that was earmarked for each and every eligible self-employed individual. Only few people know about this, including many accountants who were never fully educated about the eligibility and benefits of the SETC program. Nearly 50 million Americans qualify for this credit, able to secure up to $32,200 in relief. Yet most are unaware it exists. Here's how it works. Step 1. Secure your credit. Our streamlined process helps you file for the SETC credit directly with the IRS. Step 2. Get your funds advanced in as little as 15 days. Through our trusted partners, you can access a cash advance on your expected credit amount, bypassing the usual IRS wait times that can take over 5 months. There are no upfront fees, no monthly payments, and your credit score won't hold you back. Plus, owing taxes back to the IRS doesn't disqualify you from the credit and will only make you unable to get the advance. Join the ranks of those in our gig community who've already claimed over $250 million. This refund isn't a bonus or a gift. It's your hard-earned money set aside for you. It belongs in your pocket, not gathering dust in IRS accounts. This ETC is a beacon of hope for the self-employed in challenging times, offering financial support to those who were sidelined during the pandemic. Don't let this opportunity pass you by. Visit Gig Worker Solutions today and take the first step towards reclaiming what's rightfully yours. Because you deserve more than just to recover. You deserve to thrive.
So for today's video, we have an absolute game changer. I'm gonna be sharing with you how you can get up to $32,200 that's already owed to you, which you probably have no idea about. We're talking about the self-employment tax credit. So what exactly is the self-employed tax credit, SETC? So in March of 2020, the Families First Coronavirus Response Act, FFCRA, was signed into law to help companies offer paid sick leave and unemployment benefits caused by COVID-19. Now, initially, it was focused on employers with W-2 employees to help them weather the economic impact caused by the pandemic. Now, in December of 2020, Congress passed the CARES Act, which expanded the self-employment tax credit to cover employers and the self-employed. Now, thanks to the self-employed tax credit expansion, self-employed individuals, freelancers, and independent contractors, as well as gig workers, are now eligible for tax credits that pay you back for the time that you would have typically spent earning money that was lost because of COVID. The self-employment tax credit is federal legislation passed in response to the COVID-19 pandemic. It provides paid sick leave, free COVID testing, food assistance, and unemployment benefits. For self-employed individuals, it offers the equivalent coverage via tax credits that can be claimed on your income tax return, effectively reimbursing you for periods of sick leave due to COVID-19. Now, what is the difference between the self-employed tax credit and the Families First Coronavirus Response Act? Now, it's essentially the same thing. Now, for the self-employment tax credit, that's going to be for self-employed individuals. The FFCRA is essentially for W-2 employees. So pretty much the same program. Now, a frequently asked question, so can I apply if I've already received relief from other programs like PPP or EIDL? So absolutely. So FFCRA and SETC is a separate program. You can apply for its benefits even if you receive assistance from other relief programs. Now, is this a loan or a grant? Absolutely not. So this is not a loan. You don't have to repay it, and it's not a grant. It's a retroactive tax credit. The amount can either reduce your current tax liability or be directly funded to you. Now, in terms of the forms that you need, so the primary form is going to be the amended Form 7202, which is used to claim FFCRA tax credits for self-employed individuals. Now, just to reiterate who is actually eligible, so this recipients will be self-employed individuals and small business owners, including sole proprietors, freelancers, and other workers who face COVID-related disruptions are eligible. Now, here's a breakdown of how the days work. So for childcare-related time off, a total of 110 days, and that's broken down into two parts. So you have 50 days between April 1st, 2020 and March 31st, 2021, and then 60 days between April 1st, 2021 and September 30th, 2021. Now, aside from childcare, so this could be yourself or loved one other than a child, up to 20 days. So again, you have 10 days between April 1st, 2020 and March 31st, 2021. And then you have 10 days between April 1st, 2021 and September 30th, 2021. Now, how much of a tax credit can you expect to receive? Now, there's a couple of different factors to determine how much you might receive. Now, the first factor is going to be your Schedule C or your self-employed net income. So this is drawn from your 2019, 2020, 2021 tax returns. Your net income plays a major role in shaping the credit amount. Number two is going to be the days affected by COVID-19. So this includes any days you were sick or had to quarantine due to COVID-19. Number three, caring for a COVID-19 affected person. So if you spent time with someone impacted by COVID, this is also factored in. And then number four, you have remote/virtual learning, school closures. So if schools or daycares were closed or unavailable and you had to care for a minor child, this too influences your credit. Now, again, these just go to the different factors to consider. So the income and the days affected by COVID-19. So what they're going to do is look at your average daily self-employment income and the number of days you miss work due to COVID related issues. There's also the child care credit calculation. So if you took leave for child care, your credit is the lesser of your average daily self-employment income, or $511 per day. There's also the self-employment work interruption credit. So if you miss work due to personal COVID-related issues, caregiving, the credit is the lesser of 2/3 of your daily income, or $200 per day. And then you have net income and caregiving factors. So your net income reported on your Schedule C for the tax years 19, 20, and 21, the days you were sick or quarantine, and the time you spent caring due to COVID-19, including periods when schools or daycare were closed, all play a role in the calculation. Now, one of the best companies for helping you claim this tax credit is Gig Worker Solutions. So again, all you have to do is click the link in the description of the video and start the process. But again, just to reiterate, you could be eligible for up to $32,000 in refunds from 2020 and 2021, and you can be funded in as little as 15 days. Almost everyone with Schedule C income qualifies. So this could be sole proprietors, 1099 contractors. So if you're doing DoorDash, Uber Eats, any type of contract type of work, freelancers, as well as single member LLCs, gig workers, and other self-employed workers. Now, again, we just went over what the self-employed tax credit is, and this was authorized under the American Rescue Plan Act. And this is a special tax credit designed to provide support for self-employed individuals during COVID-19 pandemic. And again, almost everyone with Schedule C income qualifies. Now, if you found yourself in such situations where COVID impacted your ability to work, the self-employed tax credit was designed to be your safety net, and it's not too late. Now, again, you may be eligible for up to $32,220 in tax credits. Now, this process is very straightforward. So all you're going to do is create your account. Then you're going to get an estimate of how much of a tax credit you can expect to receive. Step 3, upload your tax returns. And then step 4, get your tax credit. Now, keep in mind, the deadline to file a claim is going to be April 18th, 2025. So there still is some time, but you want to get on the ball right now. Get your claim process ASAP. Now, again, if anyone is interested in getting their self-employed tax credit claim submitted, there's a link in the description of the video so you can get the process started immediately. Anyways, that's all for today's video. Until next time, take it easy, and we'll talk to you soon. Peace.